So right now there's a massive conflict in the world between Israel and Iran. And as an investor, you may be wondering, how does this affect me and what can I do? Well, actually, right now, as I'm recording this, we actually just found out that Iran looks to ease conversations here, or ease talks with Israel and somehow de-escalate things, which, as you can see on the chart here, caused a bullish reaction. But what I want to do and what I want to highlight here is what we have seen already with the Israeli-Iranian conflict, and highlight things of what to look forward to or what to keep an eye on. So I have 4 bullet points to look at for what has already been affected, and 4 bullet points of where you could see some risk and some potential opportunity. Now, again, this whole thing is not going to have anything to do with politics. I'm not picking sides, not speaking on anything in that regard, but I'm solely focusing on how it affects you, your portfolio, your money solely. So that's all we're focusing on here. No agendas, whatever, just focusing on basically the nuts and bolts of it, how it affects you and your money. So how the conflict has already affected the market so far. So we've seen that gold and oil have already spiked off of the war. Spot gold has been climbing now for some time, and it has continued to climb off the conflict, hitting multi-month highs. And oil has been slowly turning around the last few weeks as we headed into this conflict, and we saw a spike on crude oil. Now, whenever there is a period of instability, whenever there is uncertainty, war, even economic uncertainty, you see a lot of people flood into specifically gold, but also oil. Oil, you'll see a lot of that with war specifically, but gold, because people are taking their assets out of potentially risky AI names or risky stocks or risky bonds, whatever they're investing in, and they put it into something that tends to hold its value, like gold. So seeing that trend of gold going up and oil going up is a very indicative of the market moving more to a more risk-off position. That being said, as we just got the news in right now that, or at least the first taste of news that the Iranian conflict may be cooling or looking to de-escalate, you're seeing gold come down, you're seeing oil come down off of that information, which is great to see if you're someone who wants world peace. You'll also notice that the leadership of the market starts to shift. So this is what we've already noticed. And again, this news just came out as we're talking about this right now. So it's a little hard to show, but you'll start to see, or we had saw, money starting to rotate into defensive sectors. So you see money move into sectors like XLE and XLU. So what you want to look for if there's a continuation of conflict, so if this conflict does not resolve, you want to see money rotate out of, or at least you want to be aware of, money potentially rotating out of XLK, and conversely having the Qs go down, so that's your NASDAQ 100, and move into XLE and XLU. So you want to see if there's what's called a divergence. When one goes up, the other goes down. So you want to see if the Qs are going down while XLU and XLE are going up. Now that'd be another sign, or another sign that's indicative of risk-off behavior in the market. Now, one thing I want to focus on specifically, as we are now seeing, again, this reaction in real time, is what we notice in the defensive sector. So specifically with war and conflict, who makes money? Anytime there's opportunities when things happen, who makes money? And when it comes to war, it's going to be your defensive sectors. So defensive names, I've got 3 of them on the watch list here. We'll pull up in a moment here. General Dynamics, Northrop, and Lockheed Martin. What we saw from these names, they all saw an increase in both price action and volume last week. So let's pop over there real quick and take a peek at that. Looking at the weekly candle here, here's the last week's candle. This is NOC. So like I said, this is Northrop. You wick down, big candle up, big push up on higher volume than even the last 3 weeks, right? Pretty good volume. Lockheed Martin, same story, crazy wick down, big push up and closing above on the highest volume since April, big move up. General Dynamics, same sort of trend, not as strong, but same sort of trend, higher volume than probably the last 4 weeks or so, big push up, closed higher. That's another sign that's indicative of money rotating into the defensive sectors. You look at like these bigger names to get an idea of where the trend could be pushing. That's something you want to keep an eye out for. And again, we're focusing on right now what has already happened, and then we're going to focus on where we could go. Let me flip back to the SPY in case you guys want to watch that as we discuss here. And then you'll also see that global sentiment will start to dampen, but not necessarily get panicked. Like people aren't freaking out or anything, but you'll start to see, again, I want to keep saying risk off behavior. So you'll see that as of right now, actually, and even through the conflict, the equity market's actually been holding up pretty well. We've actually been pretty steady, and obviously now today, even better. But typically, when there's a conflict like this, we see that the equity market starts to get some sort of negative reaction. And arguably, we did see that on Friday. We saw a pretty decent red day with decent volume. But what you want to keep an eye out for are people hedging. So we want to see, and what we have already seen is the VIX went up, right? And we want to keep an eye on, especially if this is now, well, it's already happened and going forward, in options activity, especially on the put side, you may see people hedging more than normal. So if we see volatility slowly climb, which today it's down, which is great if you're a bull, but if we see volatility slowly climb and we see the number of people opening puts, so the volume of puts in general are climbing, especially if you're someone who uses like options flow to trade, that's going to be another sign that the market is looking to stay risk off into the near term. So we've highlighted 4 things that have already happened with the market with the Israeli and the Iranian conflict. So now let's look at 4 things that could happen, or where we want to look for both risk on, risk off opportunities, and if there are any opportunities really, if there's anything you should do, and what might fit you as a trader or an investor, swing trader, whatever you are, however you manage your money. Obviously, everyone does something a little bit different. So this is kind of like a greater overview, and then everything I'm telling you, you can apply it to your style, however you trade, however you invest. Take this information and do with it what you will. So obviously, I already alluded to oil and how it's moved, but you also see the energy stocks as well start to push up. Same kind of thing, where what you want to look on is if the conflict develops a hindrance of the supply of oil. And specifically, I don't know how to say this. I wrote it in my notes here. The Strait of Hormuz. It's a very important strait over in that area of the world where 20% of the global oil will pass through. So if for whatever reason a conflict escalates into this area of the world and it causes the supply to be impacted, oil prices could go through the roof, mainly due to the fact that we're cutting off the supply. So if you took economics in high school, you understand when supply goes up, demand goes down, supply goes down, demand goes up, right? So if there is a attack on it, some sort of hindrance for whatever reason, we could see oil prices in general skyrocket, and as consequently, your oil stocks will also skyrocket. So how this would phrase is you would see a downside risk for the overall market, for like equity names in general, but there could be a potential upside for energy stocks. So anything in your XLE, think ExxonMobil, Chevron, oil stocks, right? Oxy. That's where you could see if there is if the flow of oil is impacted in any which way through this conflict, where you could see oil prices spike, and consequently these names that work in that industry also appreciate in value. Now, we could also see some risk-off sentiment fly and triggering people to move into safety. So we already kind of alluded to that a little bit, but anytime there tends to be heightened geopolitical risk, we see a lot of money or a lot of investors de-risk their portfolios, whether they buy hedges like puts, whether they buy some VIX option strategy, whether it's longs or some sort of strangle, whatever, or they move into other assets such as gold, such as treasuries, or even the dollar directly, or other currencies. So you could see an opportunity here if you are someone who believes that the conflict may get worse or escalate, which, as I said today, live as I'm recording this, we saw that it's looking like we're de-escalating, which is great. But if it seems like there is escalation, people in general, sentiment is going to look to be risk off. You'll see gold appreciate, you'll see treasuries theoretically appreciate, and you'll see the dollar, or other currencies, depending on what you're looking to trade, appreciate as well. So theoretically, in conclusion, for that point, equities could sell off, and other more defensive areas of, I don't even want to say the market, I want to say investing, right, could increase. Now, you also want to be mindful of defensive sector tailwinds. So Anytime we see escalations in conflicts, geopolitical tensions, etc., we tend to see global military spending increase. Obviously, if there's a war, people are going to buy bombs, they're going to buy drones, they're going to buy whatever, and that's why we discuss those other three names that are in this defensive sector, NOC, LMT, and GD, as potential opportunities if you believe this conflict will get worse. Because you could see a tailwind of these global contractors actually getting some rotation, even if the market performs poorly. So you may want to consider some level of a defensive position in these names if you are someone who believes the conflict may get worse. What you want to keep an eye out for, and we already alluded to it when we talked about the weekly candle, you want to look for increased volume and see if I'd look at the daily, watch day by day. Regardless of the price action, I would want to see if volume's ticking up. Ideally, I mean, obviously, I should say, we want to see the price go up, but to see if there's money flow into it, and then if you're more you want the market to be risk on, and you want to invest in equity names, then you want to see those names come down on higher volume. So, depending on how you feel, you may want to keep these names, these specific names. I like to get a barometer on the defensive sector specifically. So again, NOC, LMT, and GD. Watch them because I believe they're going to give you a little bit more of an inkling on how and where the market may be going, I guess I should say. Lastly, we've discussed the VIX. We're going to talk about volatility again really quickly. Whenever we see conflict, especially in the overnight market, when something happens, someone bombs someone else, whatever thing happens, we tend to see a spike in the VIX. Now, this could offer two different opportunities, whether you are looking to short the VIX, which long-term is not a horrible idea, but depending on how you do that, what vehicle you use can be not a great idea, or whether you're looking to long the VIX, anticipating a potential risky move in the market or potentially increased volatility, more bad things happening in general. So you could find trading opportunities in volatility in general, or volatility adjacent instruments like your UVXY, VIX is another volatility index, VXX. There's all these other ETFs that you can use as well. But the VIX tends to, and you go back in history and we could look right now, the VIX tends to surge rapidly and then drop out, decay, etc. So if you're not exposed to a long and the market takes off, or I should say VIX takes off, which you see here, I mean, this is the daily candles. So 1, 2, 3, big push. I mean, this is crazy volatility move. This is back in April, from 20 to 60. And then, I mean, obviously these are big moves either which way, but it always tends to decay. And even when we got a spike here on 523, you could even call it for 2 days prior, we were down at 17, it spiked all the way to 25. The next day gapped all the way down to 20. So if there is a big spike on volatility, what I personally like to look for, if I am looking to play volatility, and depending on how everything else looks in the world, I look for the downside, because I would much rather short the VIX than long the VIX. Now, if I am long the VIX, there are very specific scenarios, and I'd be very careful, especially if I was using options, because it's a very speculative thing. But if you long the VIX at the right time, it could pay very well. But a lot of the times, longing the VIX tends to be, at least in my opinion, a losing trade strategy. Obviously, it can work, and I just look at this chart right here, it does work. But if you are someone who is long the VIX right now, or you're thinking the conflict's going to get worse, you have to think of it this way. And we're looking at the VIX right now, we're down 10% because of potential de-escalation news, right? The conflict's already happened. The market's aware the conflict's happened. The conflict is continuing to happen, at least at this point in time. The VIX is sitting where it's sitting right now, knowing this information. And even if we remove today, even if we go back to before that news came through, the VIX was at 19. We'll call it 1950, right? So the VIX was sitting at 1950, knowing there's a conflict, knowing that people are getting bombed. It still gapped down today, knowing that this was happening, knowing that there was things going on in the world, right? So taking a long on volatility, you have to be very precise, and something really bad has to happen to cause instability. Now, the last thing I'll leave you with as a reminder, the VIX is not a tool to measure volatility. What do you mean, Adam? It's called the volatility index. Yes, it is, but the VIX should be used as a means of price discrepancy. How the VIX gets its value is the difference in the spread on SPX options. So, as more people disagree on price of what the SPX should be trading at, that spread widens. And as that spread widens, the VIX goes up. So it's showing instability in that sense because traders are not agreeing on what the price should be, right? That makes sense. Now, as people agree on what the price should be on SPX, the VIX will also come down. So having that understanding in the back of your head is really important because it's not necessarily a bull or bear indicator with volatility or even a volatility indicator. It's more of a sentiment indicator of how people are feeling at that moment in time on, are we agreeing on price or are we disagreeing on price? And understanding that piece, I think, makes it much, much easier to utilize the VIX if you want to implement it in your trading strategy. Now, that being said, that's going to encompass everything I have here for you and a little bite-sized taste of how the Israeli and Iranian conflict could affect your portfolio, what to look forward into the future, and what to basically be prepared of if anything happens. Now, today, like I said, we did get this de-escalation news, which as you can see here, the market tends to like. So we will touch base and see what happens here into the future, but you got everything you need now to be armed and at least be knowledgeable of what is going on in the market as it pertains to this conflict. If you enjoyed the video, don't forget to like, share, and subscribe.